Hey traders, this is Jeff from ZenTrader.ca, and we're going to do a sector review tonight. I think I'm going to illustrate why it's time to be real cautious. I've been a bull for a while, ever since January 4th, and I've been basically saying buy every dip and recommending that to my subscribers. And now what I'm seeing, I went through about 60 sector charts, and I'm going to show you a bunch of them that really illustrate that it looks like we are in the process of putting in some sort of top. Now, whether that be short term, mid term, that's yet to be decided. But okay, let's just start off with containers and packaging. And I'm just going to explain this one chart, and then this applies to pretty much all of the ones that I'm going to show you. Charts, when they're in uptrends, tend to oscillate between 80 and 40. And generally, when you have a strong RSI showing, like you do here, eventually you are going to get a pullback to 40, and that can oftentimes be a buying opportunity. And in this case, it came down to 40, touched, rebounded a little bit, came down a little bit more, retested the 40, and then that springboarded up to resistance. And that's where we're at as of today's close. It actually went up, touched, and actually sold off a little bit. And this is forming a megaphone pattern, which is not a bullish pattern in any way. And I think this could have the possibility to pull back to the 210 range. But what I'm illustrating is the market has run out of opportunities to bounce, in my opinion. So these next sectors that I'm going to show you, these are all the ones that led the market and are getting very, very tired. And then if I have time, I'll create another video which will show you who the new leaders are currently. And these are not sectors which these are sectors that do well when the markets go down. So you've got containers and packagers, specialty chemicals. This was very strong at the end of the year and into the beginning of the year, and then it really spent, here it came down to 40, and then here was the this is what I call the easy money trade. Then you sell into resistance and then you move on, because look, it's come back down, test, and it's just been chopping ever since. Industrial suppliers, very strong. You can see here it came down, touched 40, and then bounced, and the price nearly went up to hit new highs, but the RSI is languishing. It's barely bounced. This is just not a good sign. The internet index, it came down, and this wasn't even a strong move in my opinion. This was the strong move, and here you've just had negative divergence ever since, where the price gone on and hit new highs, and you've got an RSI that is just weakening with every rally, and now this just looks like it's pretty much done. The home construction index, this would have been the bounce. Here you can see it actually went up a little bit more past the previous resistance and then just sold off. Railroad, and you're going to see a theme between some Dow stocks and some transport stocks, and this is another megaphone pattern, and this just reeks of a top being put in. So moving more quickly, financials, same thing. It bounced here. In my opinion, this would have been the trade from here to here, and it never even made it back up to the previous highs. That's how weak it is, and it's come down. And so basically, the RSI is just doing this stair step down, and so the next move is going to be, if it can't take out this high, it's going to come down and take out this low, probably go up below 30, probably go down to 20, and then maybe bounce back up a little bit, and it's just going to do that for a while. Real quick, trucking index, airline index, and then heavy construction. Like, all of these just look really tired.